Have you ever felt the gnawing fear of missing out on a potentially lucrative trade in the Forex market? This is a tale as old as time, a tale of an eager trader named John, who encountered an insidious force known as FOMO, the fear of missing out. In the roller coaster world of Forex trading, FOMO is a relentless foe, often leading traders to make impulsive decisions, blinded by the promise of quick wins. But these hasty choices can jeopardize one's trading journey, as they did for John. FOMO can cloud a trader's judgment, making them abandon well-thought-out strategies and chase market surges instead. And when the market takes an unexpected turn, they're left with a plummeting account balance and a heart full of regret. This is the destructive power of FOMO. Stay with us as we dive into John's journey and understand how FOMO impacted his trading decisions. John, like many of us, was not immune to the pull of FOMO. The world of Forex trading, a thrilling roller coaster of highs and lows, often tempts traders like John into hasty decisions. The allure of a quick profit, the excitement of a market surge, the fear of missing out, it's a potent cocktail that can cloud even the most rational mind. One sunny afternoon, John found himself staring at a soaring market. His heart pounded in his chest as he saw the numbers climb, each tick of the graph whispering promises of potential profits. The fear of missing out, the insidious FOMO, crept up on him, whispering sweet nothings about the fortune he could make if he just jumped in. Like a moth drawn to a flame, John was captivated. He was swept up in the excitement, his finger hovering over the buy button. And then, driven by the fear of missing out on a golden opportunity, he took the plunge. He bought in, his mind filled with visions of success and wealth. But the market, as unpredictable as it is thrilling, had other plans. No sooner had John entered the market, it took a nosedive. His soaring profits turned into plummeting losses, and his account balance shrank before his eyes. The roller coaster that had promised him a thrill ride to the top had instead dropped him into a freefall. As he watched the numbers fall, John felt a cold dread seep into him. The reality of his impulsive decision hit him hard. He had let FOMO cloud his judgment, steer his decision, and now he was paying the price. John's impulsive decision, driven by FOMO, led him to a harsh lesson. A lesson that taught him the importance of discipline, of a well-thought-out strategy, and of the dangers of letting fear guide his trading journey. But as we'll see, John's story didn't end there. His encounter with FOMO was just the beginning of his journey to becoming a better, wiser Forex trader. Despite the setback, John was determined to confront his FOMO. Instead of surrendering to his fears, he decided to seek guidance from a seasoned trader. Someone who had weathered the storms and sailed through the calm waters of Forex trading. The trader, a veteran in the game, offered John a piece of wisdom that would become his guiding light. To conquer FOMO, you must build a rock-solid trading plan. That was the first step towards confronting FOMO. Encouraged by these words, John took to the task with renewed vigor. He began to craft a comprehensive trading plan. It was no simple list of do's and don'ts. No, it was a meticulous outline with precise entry and exit points. It was a blueprint that factored in market trends, potential risks, and possible rewards. But the trader emphasized to John that a plan is only as good as its execution. He said, "Dive deep into market analysis, John. Make decisions based on data, not emotions." This was a wake-up call for John. He had been letting his emotions cloud his judgment, and that's where FOMO had found its way in. So he immersed himself in market analysis. He studied the movements, the patterns, the fluctuations, and the trends. He was no longer a gambler relying on luck. He was becoming a strategist relying on informed decisions. The trader then underscored the importance of discipline. He told John, "Stick to your plan relentlessly. Discipline is your armor against FOMO." John took these words to heart. He resisted the temptation to make impulsive decisions even when the market seemed to be offering irresistible opportunities. John was learning to control his FOMO. He was becoming a more disciplined, more strategic, and more informed trader. But he still had one more lesson to learn. Remember, in the world of Forex trading, being armed with knowledge and a plan is vital, but the true test lies in the execution. John was learning to control his FOMO, but he still had one more lesson to learn. John's mentor emphasized the last, and perhaps the most crucial aspect of trading risk management. In the grand arena of Forex trading, risk management stands as the unsung hero. It's the invisible shield that guards traders from catastrophic losses, keeping them in the game long enough to learn, grow, and eventually succeed. And this was the lesson John was about to learn. John's mentor explained risk management isn't about avoiding risks altogether, John. It's about understanding, calculating, and controlling your risks in every trade. John set out to grasp this concept, delving into the core principles of risk management. He learned to define his risk tolerance, understanding that this decision was personal and depended on his financial circumstances and emotional resilience. Next, John discovered the power of the stop-loss order, a tool designed to limit a trader's loss on a position. His mentor explained, setting a stop-loss means you predetermine the maximum amount you're willing to lose on a trade. This way, you ensure that even if the market goes against you, your loss is capped. John also learned about position sizing, adjusting the amount of a currency pair he would buy or sell based on the risk he was willing to take. This, he realized, was another effective way to manage his risk. As John delved deeper, he found that risk management was not just about protecting him from financial losses. It was also a potent weapon against the emotional turmoil caused by FOMO. By calculating and controlling his risks, John could trade with a clear head, free from the fear of devastating losses that FOMO so often exploited. In a world often dominated by greed and fear, risk management provided him with a sense of control and stability. It became his fortress against the storm of FOMO, allowing him to trade with confidence and composure. Remember, John, his mentor concluded, in Forex trading, the goal isn't just to make profits. It's to manage risks so you can live to trade another day. With these lessons, John was finally equipped to face FOMO head-on. John's journey serves as a valuable lesson for all Forex traders. It vividly illustrates the destructive impact of FOMO on trading decisions. It emphasizes the need for a solid trading plan, the unyielding discipline to stick to it, the power of comprehensive market analysis, and the crucial role of risk management. All of these elements combined can help traders resist the siren call of impulsive decisions. Remember, like John, you too can conquer FOMO and become a successful Forex trader. If you found this video helpful, don't forget to subscribe to our channel for more insightful content on Forex trading.